April 28th, 2025. Just a reminder, we had a couple new members join recently. To those people, you are you entitled to the 3 Bar Micro channel Discord. So there is a link to that in the members area, just an FYI to those people. Okay, so on this day, I thought that the 15-minute chart coming into the day was actually, really, really critical. You can see this is the first bar of the day. Sorry, this is the first bar of the day. Look to the left. When was the last time we were in this area? If you go back 15 days, there wasn't even time that we were in this area. The closest was on Friday. There was resistance, from like 20 to 25 days ago, but it gets a little bit less relevant at that point. What I thought was relevant was this. Sorry, the bell just went off. What I thought was relevant was this. This was the high of Friday, and we're trying to get a breakout above the high of Friday. So if we're going to get a successful breakout, one, outside bars a lot of times pull back first, so you have to keep that in mind. And two, we should get good follow through. So this 930 bar on the 15-minute chart really needed to get good follow through, in my opinion, in order for this to be a successful breakout. So if you were buying early in the day, you were probably buying towards the top of a trading range. So it was dangerous to be buying up here. Most traders were probably looking to sell a reversal. 4, 5, and 6, very high probability that this gets a second leg. I thought this was a good 3-bar micro channel. I don't personally trade before bar 7 just because you can get news bars and big reversals on bar 7. So nothing wrong with selling bar 7. I thought it was, bar 6, selling the close. I thought it was a pretty strong trade, but I just personally stayed out of it simply because I don't trade before bar 7. But I thought it was a really good trade to sell the close of bar 6 and look for a symmetrical second leg. If you had done that, you would have gotten it. You can see down here. So I thought that was a pretty good trade. Do you buy above bar 7? No, I don't think that's a very good trade. There are contexts in which, a sell climax and a good looking reversal makes sense. But that's the thing is if you're going to take a swing trade like this, you're going to have to understand the context a little bit better. With being at the top of the trading range, as I just showed on the 15-minute, and this failed breakout, the bulls are trying to get the breakout and it just failed. So buying above 7 doesn't make any sense, especially when 4, 5, and 6, very high probability of a second leg. One of the reasons the 3-bar micro channel trade is, one of the reasons I really like it so much is because it gets you out of the habit of taking poor swing trades. It gets you into the habit of realizing that 7 is a low probability trade. Well, it might get a little bit more to the upside. It probably won't get too much more, and you can sell the close of 7. It's not, it is still a strong bar, so it's maybe not great to sell the close of 7, but you can sell higher. You can sell the 4 low, the breakout point, right? The swing point, the bar 4 low. You can basically sell after this 3-bar micro channel, and there's a high probability that it gets a symmetrical second leg. As I've mentioned in my my other video on, my video on my entire study so far on the 3-bar micro channel, very high probability, 70+% that you're going to get a symmetrical second leg. So I'm not really interested in buying above bar 7. Rally to bar 11 is a 5-bar micro channel, 7 through 11. So that will probably get some sort of second leg. We shouldn't go straight down. And the nice thing as well is you start to learn that, once you start scaling in, you'll start to realize that a trade like 12, which I used to look at and say that's a swing trade. Okay, I'll sell the close of 12 and, look for some sort of second leg. As the longer you trade some sort of 3-bar micro channel, that's what I trade, and learn to scale into it. The more you'll learn, you can sell more on the close of 12 and you still have a wide stop and you know how to scale into it. So you always hear Al say, trade small on a swing trade, scale in if it goes against you, add on if it goes for you. And that really is, starting to resonate with me because I can sell the close of 6. I can wait. I can sell more on the close of 12. I can wait. I can sell more on the close of 17 and 18, knowing that there's very high probability that I'm going to get some sort of symmetrical second leg. So I just think that that's important. I did sell the close of 24. You could argue it's a late leg, but I thought that we had a triangle. We had a breakout of the triangle, and then I thought that 20 was a leg count reset because it's a breakout. So triangle, breakout of the triangle on 20, leg count reset, breakout, pullback 21. And so I thought 24 was potentially leg 2. Either way, 75-80% chance that you're going to get some sort of symmetrical second leg, really strong bars, and part of a 6-bar micro channel, 1, 2, 3, 4, 5, 6. So odds are 6-bar micro channel, first reversal is going to very, very likely to fail. And, whoever you are watching, you know, I've had a lot of times in my life, for a lot of the first couple of years I was trading where I would buy above bars like 26. And if you bought above 26 today, I would recommend you stop swing trading and you trade the 3 bar micro channel and you scale in. It's a members video, but I made a video on exactly how I do that, and just focus on the early legs, trade the 3 bar micro channel and scale in. Because if you're taking trades like this, you are probably lost, and it's probably going to take you another 7 to 7.5 years if you're taking trades like this. So it's an outside bar, that's a trading range bar, not that good. This has a high probability, like I said, 75, 80% of getting a symmetrical second leg. So taking a trade with a 15 to 20, maybe 20% probability, and 20% is actually fair. 20% probability, and your risk, even to break even on that, you're going to have to make 5x your risk. It's 11 points. Really doesn't go all the way up here all that often. So really a bad trade on 26. Better to sell the close. 27, another one of those bars, like in this area where you could sell the close, sell the close, sell the close. You could sell the close 27, 28, expecting to get a symmetrical second leg. I did get, the close of 33 reaches that point. This is a poor drawing. I missed by a tick on 24, but it does hit it on 33. So I ended up getting my symmetrical second leg on 33, and I got out. I did not take 32. I just ended up taking just exiting here from this trade. But we have a lot of legs down, spike, pullback, and then the channel has started. So a lot of times you get 3 legs in a channel. But when you get a channel is really a leg in a trading range if you think about it. Because if you think about the market cycle, spike, channel, trading range usually tests the bottom of the channel, which means the channel is the first leg of the trading range, if that makes any sense. So I thought that we might have to test back up into this area. But 32 was a reasonable 3 bar micro channel as well. You could scale in. I did not like 39 approaching the moving average. I've said it a bunch of times before, and I'll say it a bunch of times in the future. This trade is lower probability approaching the moving average in a lot of cases. I thought 51 was an exception to the rule. I'll get to that in a minute, but I did not take 39, even though it's tricky. But 39 was essentially it was a winner if you think about it. The low of 37 to the close of 38 gets a symmetrical second leg on 42 and 43. It doesn't necessarily look great, but it does get it. So you tracking how often we do get those symmetrical second legs, you'll find it's pretty frequently. 43, 44, 45. I initially sold the close of 45, but it's such a late leg. Spike, pullback, 3 legs down in a channel. 1, 2, 3. Or you could argue 2 big legs, 1, pullback 2. Either way, we have a lot of legs down and you're selling very low. So I initially took 45 and scaled in, and I just got out of break even on 47 because, it is high probability, but you start to learn what the low probability looks like, and I'd really rather not take this trade. So I ended up getting out. I thought that this rally up to 40 was strong enough to get a second leg, and I thought that this made it unlikely that the bear trend would last all day. So that's why I bought the close of 51. The bulls had done enough to make me think we were going to enter a trading range. So I bought the close expecting we would get back up into this area. So I bought the close and I got 1R. So that was a win. I thought, though, if you think about it, there's no real reason to exit. I did exit just because it's what my system is doing now, and I haven't quite tested the ad on when I get follow through sort of thing. Excuse me. Hold on. My throat's a little dry. But this is just a 3 bar micro channel on a different time frame. Let's look at a 10-minute chart. So there it is. That's a great 3 bar micro channel on the 10-minute chart. So I did buy obviously early in this chart somewhere down here, and then this is my signal. So it was really more tempting to add on and just watch this chart than it was to just exit with my signal. But I did end up exiting just because it's what I've studied. But I think it would make a lot more sense to just keep adding on these closes. And I know it's a 3 bar micro channel on some time frame, and I have the scaling management. So I know that worst case, I should be able to scale in and make money. We do end up rallying. We get 3 legs up and then a breakout above. And we basically tested back to the apex of the triangle and then went sideways. The daily chart not really that convincing for the bulls, to be completely honest with you. It is a 3-bar micro channel, but this is a good surprise bar, but probably the top of the trading range. We got 3 legs down, and then we have 2 legs up. We're trying to break out above this high, but if we're going to break out, it needs to probably be in a more convincing fashion. So I think the bulls could fail any day, but until the bulls get a really strong bar that looks maybe something like this, they're not really going to convince me that the breakout has been successful. So I'm ready to trade a failure if we start to get a move in the bear direction. Sometimes after a move like this, momentum is slowing. You can see an outside bar, a bull bar, a smaller bar, a doji bar. So sometimes the bulls will just give up, and you'll get a bear bar that looks something like this on the following day. So we might get that tomorrow, but I really think it's difficult to want to buy in this area. We'll probably pull back. I wouldn't be surprised if we pulled back to this area, maybe 5,200. The weekly chart, obviously a really good looking bull bar, and if that breakout happens that I was talking about, it's not necessarily high probability for the bulls, but if it does happen, this will get follow through, and we could rally up to here somewhere. And I went over the monthly chart in my last video, so I'm just gonna wait for the end of the month to go over it again. But not looking great for the bears on the monthly chart so far. All right, that's going to be it for this video.